Hi everyone, my name is Piterpakulski. Today we will continue creating financial model over delivery business from scratch. And today we have arrived to the cash flow statement. Finally, we will consolidate all the revenues, expenses, and create the cash flow statement. This is the core of any business idea. Inside cash flow statement, the entrepreneur sees how much money, how much financing he needs to start the business idea, when will be the payback period. Later he will be able to calculate net present value, all the financial efficiency using cash flow statement. So cash flow statement is the first statement that the entrepreneur needs to see what is his business idea about. So let's start. So we'll start with creating a timeline for the cash flow statement. So first of all, we have to consolidate the revenues. So now we go through all the model, take the revenues, they are marked with green. So we have revenues from different types of customers. Then we also have the revenue when we sell old cars, old delivery cars. So we just search for the line.
Well, cash flow statement is, well, here we have selling all delivery cars.
So cash flow statement is 100% automatic table. You don't manually put any inputs. The only exception may be financing.
So you can make finance article. We'll show you how you can do that in later videos.
So now we move to direct costs. So now we go through the model and pick all direct costs marked with red. So we should be very attentive. So here we can see delivery cars payroll, insurance, unexpected expenses on delivery cars. The delivery cars investment plan will go to investment. So we take these three lines. Then we take fuel, service expenses. Then we have direct costs inside the average check. So you have to be very attentive. So that's all with direct costs. Then we move to fixed costs. So inside the cash flow statement, we just collect data from the financial model that we've already created. Then we have payroll. Now we will have the block with taxes. For taxes, we will create a separate block of inputs. So for example, we'll have the revenue tax, which is for example equal to 3% from the revenue. This will be the input. So the base will be the revenue. Then for example, we will have profit tax. Profit tax, for example, it will be 5%. Now we will have, for example, payroll tax. We may have asset tax. This will be dollar per month. So now we will get back to our cash flow statement. We give the link to all our taxes. So this will be the revenue tax. This will be the profit tax. We will calculate a little bit later. Payroll. Asset. For asset, we will just take this value. Then we'll go to chronology when we start our operating activity. Operating activity, it is this line. So now we'll calculate result from operating activity. So now we will consider investment stage. So now we will go through the model and find the line when we buy delivery car investment plan. Then we also have additional investment plan that doesn't deal with repurchasing of delivery cars. Here it is. So we add this investment plan here. Then we will have the result from investment activity. Then we move to financing activity. Equity. This may be the only manual line of inputs inside the cash flow statement. Equity. Then here we get the loan. We'll take a loan from here. Loan. Then principal payments. Then we take interest payments. So we will take this plus this minus this minus this. I will extrapolate this formula. So now we have two last lines of cash flow statement. So here we have 0, then we take result from operating activity plus result from investment activity plus financing activity plus this. Then we move this value here. Then we extrapolate this formula here. And then we extrapolate to these lines to the right. So now we can group and we have forgotten about the profit tax. We will get back to profit tax. So we start with calculating the net profit. So this is the tax base for the profit tax.
Now we go to the line of the cash flow statement that is devoted to the profit tax and write the formula for it.
If the net profit will be less than 0 or 0, then we pay nothing. Otherwise, we take the net profit base and multiply it on the rate. So now the statement is it is time with inputs, with numbers.
So this will be the topic of our next video. We will talk about financing, scenario analysis.
So if you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch for your business idea. So see you next videos. Thank you and bye.